How's it guys? Welcome back to FX Rhapsody. Today we're looking at two currency pairs again. We're going to be focusing on the Euro USD dollar and then also the British pound US dollar. Before we hit the charts, just go visit my website. On the bottom left corner over there, there is some nice content about trading. So any previous analysis for those of you that's starting out on trading that that wants to learn more, there's some nice video categories there. And also for those of you that's more experienced in trading and you just want to top up your skill, there's some nice strategies and everything that you need to know about the trading. Also preferred brokers, go visit my preferred brokers. These guys are brilliant, really reliable brokers for making sure that your money is safe. So let us hit the charts, guys. So we're looking at the Euro USD dollar first. We're looking at the daily time frame, doing top-down analysis, starting off on the daily time frame and then moving down to the hourly. So what can we see on the daily time frame? We see that this trend is still currently following downwards. It's still in between these two trend lines, respecting these areas constantly. As you can see, hitting the bottom, coming up again. Now we're looking at a consolidation that's forming at in the middle. I'm going to look at the COT reports before we move on to a lower time frame, as the COT reports is more of a direction in trade. So you can look at it for more direction confirmation because it's more long term. So looking at the COT reports, I'm looking at the euro, and we can see that the euro has been in this, like we saw in the downtrend, just on the charts now as well. It moved from a 50,000 net position all the way down to a negative 41,500. You could see last week that a lot more longs have been opened in the market, more shorts also opened, but a lot more longs than shorts. Not a lot, but I mean, it's just keeping that euro in that area over there. And that is why we can see this whole consolidation just forming, So we would like to see price breaking out of these two trend lines to see a big movement upwards or even downwards. Let us go to a lower time frame and let's see what happens or what is happening and what happened there during the week. So on the lower time frame, what we can see is, I'm just zooming in a little bit. This is obviously the consolidation that we're looking at, and in that consolidation you can see that price just went into that liquidity area. So that was our previous low over there. So price just hitting into that liquidity area, just pushing down up again. And you can see that, price action, how price action works. It formed that little fair value gap as it broke that previous high over here. Okay. As price came up, price action pushed through it. Big Banks Institute pushed that price through. So price was hovering and went up a little bit. And then it just drew into that price action, that fair value gap. If you were trading the way, if you're trading that strategy, basically, you would have had, where's my long position? So you would have had any long positions open there. And obviously, it's a huge amount of risk because it's long positions, but depending on your lot sizes. But I mean, you could have taken a nice, the risk reward ratio would have been a lot nicer. Let us move on to our hourly time frame, because Euro USD, it is definitely just consolidating. So if I zoom out a little bit, you can see it's just up and down the whole time. Okay, so not a lot of movement this week to speak of. You could have, on the lower time frames, you could have caught some nice pips, but currently I'm just waiting for these two lines to be broken and see if there's any movement going up or down, just breaking this consolidation that it's in on a higher time frame, just and see where the movement of the market is. It is obviously the end of the month, and we will have to see what happens in the new month coming. And I think that's the reason for, and obviously the reason for this consolidation is because price is just hovering in that end of the month cycle. So let us move on to our next currency pair, which will be our British pound. Here we go, our British pound US dollar, obviously starting off on the higher time frames, the daily, so that you can get the bigger picture. So on a daily time frame on British pound US dollar, what we can see is, there we go. So you can see that a downtrend forming, as we obviously see that, and the reason for the downtrend, or more confirmation for those of you that doesn't know it, just draw that little trend line down there, and you can see that area being respected, that trend line being respected constantly. We saw this break in structure over here, you know, for those of you that's not aware of that. So there's a nice area of, let me see, this is the previous low as price went up. So you see that break in structure forming that fair value gap, price hitting that bottom of that trend line, coming up, retracing nicely, and then this is fair value gap area that it's formed, and then you could have just sold off here, and as you can see, price moving nicely down, hitting that trend line once again, coming up. And now what we're sitting is, we saw a nice little area or gap being formed over here, nice imbalance in the market. Just zooming in for those of you not seeing that. So it's in between those two candles, price coming up again. Now will it follow the same way it did? Just, you know, if you look to the left, there's a lot of times, most times, you know, market just repeats itself. So will it follow this trend downwards? We will have to see what price is doing when the market opens this week coming. So 4 hour time frame, let's just zoom out a little bit. So on what can we see on the 4 hour time frame? We saw the price going up. Where did price go up to? We saw that fair value gap, like I told you, it formed. Okay, so at the bottom over here, you see that price came up. There was a downwards on a daily time frame. It's a downwards movement. You saw price hitting that area, coming up again. Now it's following all the way up. It's following this trend line going up, forming this little wedge area. And again, nice little entry that you could have taken there, where price action, you know, breaks structure as it forms up. I'm just going to show you there, right about there. You can see that area in the market, structure being broken, forming that fair value gap, price coming here, 2 opportunities or even more, price going into that area where you could have just bought up, price just hovering over here, came back again, hitting that area of the trend line, and then move upwards. And that's where it's a nice little buy area that you could have gone up with. And if you were taking, if you were taking that buy, your risk would have obviously be just below that area of that candle. Okay, I do explain this all in previous videos. And then your risk and your reward, you know, would have been that area of the fair value gap that price gets drawn into. So that would have been a nice little risk to reward, 5, almost 6 to 1 risk to reward that you could have taken this week on British pound, US dollar. All right, so moving on to the hourly. So what can we see is going to happen next, or what are we looking at for this week coming? Let's just have a look at the hourly time frame. So I'm just going to zoom in a little bit. That's my previous analysis there. So when we finished off last week, we had 2 lines. Okay, we had this line over here and that line that I've drawn. So you could see price going up, going past that previous high, hitting that liquidity that's over there, then pulling back nicely. So where does it pull back to? You take your Fibonacci from this low, that low over there, all the way to that high. It's the highest it went, and then a nice big pullback, and that is when you pull your Fibonacci in, and you can see it going very nicely in between the 62 and the 79% for that perfect little entry that shoots up, and you could have had nice little pips running, and that price obviously carried on all the way up to that liquidity area that formed on the 4 hourly time frame. That is why you need to always look at all your time frames. Don't just focus on one time frame. Don't just look at one picture. You look at the bigger picture, looking from the daily down to your hourly time frame, and even further down, where you can get better entries on your 15 minutes. Very good entry time frame to be watching, and then obviously even drill down to your 5 minutes and 1 minute time frames. But again, price as it broke that area again, huge gap in the market, huge gap in the candle, imbalance. Price retracing into that imbalance. You could have taken a nice little for the last bit of the week, you could have taken a nice little buy, obviously up, then price retracing back, and you know, this is the area that price is currently in. It's still in this imbalance, but this is normally what happens during the end of the month. Price just again consolidating, just waiting to see what's going to happen in price, and that is why I draw these 2 lines, so I can just, you know, visualize what price and whatever price does after or beyond these lines, be it upwards or downwards. We react to what price does and we catch those pips. We don't just predict, we react to what the market gives us. So guys, that's all from my side. I hope you enjoyed this analysis. If you did, don't forget to hit that like button, hit that subscribe button, the notification bell. There's definitely more video content coming your way regarding trading. Guys, I hope you've been having a wonderful weekend. Stay safe and happy trading, guys.